You may have to turn off your video. Can you turn off your video? All right. So I don't want
Okay.
to see your face. You look funny. I don't want to see your face. You look funny, so you may
Okay.
have to turn off your video. So I'm going to use maybe something like this. Okay. So today I want to talk about oh boy. If you look at this chart, it could be scary. You would think there's nothing there to trade. Nah, I don't like this particular
I
brokers.
was feeling GP, GU and EU yesterday.
You were trading GU and EU.
I was watching their move because he said something on that be like I sent to me. He
Okay.
said something that GU and EU do move same direction.
Okay.
So I was like, let me study this. Yes, they were actually moving the same direction,
Okay.
but at around 8 to 9, 8 that morning time, they were actually giving no direction of trade. Because I was actually we were still talking about that before. That was the first thing you see in that video. So I
Okay.
said that when you look at it, it was actually ranging. It was actually ranging. It was not giving any direction of trade.
Uh,
That is
okay. I think with these I can, yeah, let me delete this. I like this one's outlook. Okay. So let's look at a trend. I've I've always told you we talked about what a range is, and then so let's look at a trend. So when we look at a trend, the trend has to do with what the directional movement of what price. So when we look at the directional movement of price, we are looking at either the price going what upwards,
bullish or
upwards,
bearish. That is
yeah,
up or
or
down.
downwards. So when we look at upward price movement, what we are actually looking at what we are looking at the
A
market.
bearish. A bullish.
Calm down now. Seeing highs and lows. I can see you really prepared for me today. It's all right. And then we are looking at downwards. We are also looking at swing highs and what and lows. All right. So the difference is that in an upward trend, swing highs and lows is called what? Higher highs and what? Higher lows. And then in downwards, what are we looking at? We are looking at lower highs and what? Lower highs and lower lows. All right. So that being that, so the first thing first I'd like you to know is that anytime you come to a chart, what you should do first and foremost is that you should identify what price is doing. That's the first thing you should do. First thing first. So you come to your higher time frame, maybe your weekly or your daily. I wouldn't suggest you going beyond the weekly and daily. But if you want to go beyond, still fine with me. So I'll ask you, look at what price is doing. What is price doing currently? So if I squeeze, like you've seen this USD if I squeeze this chart, okay, so I think I can move this way. If I squeeze this chart, what would you say price is doing? Well, even in
Preparing
two,
an uptrend.
the price, know that price is going upwards. So currently, uh, price is price is doing this. That's my point. Price is going upwards. So now based on technical parts of analysis, we know that when price is going upwards, this is how the diagram aspect of it shows.
Yes,
Now
sir.
moves like this, where this becomes your swing low, this becomes a swing high, this becomes a swing low, this becomes a swing high. Can you can you mute yourself so that the noise won't be so much? This becomes a swing low, and this becomes a swing high, and this becomes a swing low. So I'll take our time to teach expressly on uptrend. So maybe the next class we'll talk about downtrend, all right? So now this uptrending structure is this is a diagrammatic representation of the uptrending structure. You get it? So with this, I think we can comfortably say, oh, when I see this kind of pattern, I can tell myself, okay, price is actually going up. Now, this is the diagram aspect of it. It is different from what you have in the chart. Do you understand? It's different from what you have in the chart. That's because uh, when you're trading, there's a very high possibility for you to have the illusion of, okay, this is what I'm going to see. So I think one of the things you're going to do, I'm not enjoying myself. Oga, mute yourself. Talk. Let the noise shabby. Hello, enable. Paul, can you hear
Sir?
me? Yeah, unmute yourself.
Yes, sir.
Let's just communicate. Let's just communicate. So if you look at this, you can see that price has actually moved in a very, very, very similitude way. So I can say up, down, up, down, up, down, up, down, and then it ranged here, and then moved up, down, up, down, up, down, up, down, up, down, up. Okay, so now if you check these levels again currently, if you check these levels again currently, whew, this is where we are currently in price. If I'm gonna label this, let me label this so that it will be easy, because first thing first is in trading successfully, after you know your trend, the first thing is you need to label appropriately, because if you don't label appropriately, you're gonna make mistakes. In labeling, what you look out for is your what? Your swing points. And what are swing points? You're looking at either the peak of the high or the what?
Pick up the low.
The valley. The valley point in the low. Which one is peak of the low? Okay, the value point in the low. All right. So that's what you're looking for. So if you're looking at the swing points, what are you looking at? The peak of the high or the value points in the low? So what's a peak? Here's a peak. One, peak, two. Now this is in identifying what swing highs and swing points, because once you've done this, you are solving a little percentage of your problem in trading. So many traders don't even understand how to go about that, and that's what I'll guide you on in this video. So ability to identify swing points in a higher time frame. So, and then these are almost on the same point. So I think so now after you've been able to identify your swing points like this, if you're using an Android phone, you may not be able to do this. If you're using a laptop or a desktop, yeah, you can easily do this through the trading view. So I'll just come here, come on in, and then I will drag my line up, keep it straight, and leave it that way. Then I'll leave it that way. Once I do that, that's point one. So here is another, so I think I can take that away and take this away. Okay, so sorry for the silence. Okay, so I think I can also drag this down. So let me take out some of this so that I can comfortably see. Now, sometimes you may not be able to see this. You may have to zoom it up. So you may have to zoom. So, okay. Right. So I can also choose the label as what? Higher high HH.
Yeah.
Like it up. Lock it up. And then this is what my higher low.
Yeah.
Now, if you check precisely, this is the point, but then you have this candle here, this point here. Yeah, you had this. So I prefer I drag it down this way. You get it? That point there. Okay, so higher low. Yeah, so I'll put my higher low there and then I'll lock it up. So that's point one is labeled higher high, higher low. Okay, I'll now go to my point two. What was the point? What was this thing said? The peak is the highest point, right? The highest point of the swing high. So this is the next one. I can now drag that.
Sir, one of the questions, sir.
Okay, ask.
When choosing your peak point and your value, does the candlestick actually affect, like, if it's a bullish or a bearish candlestick, does it affect?
No, it doesn't affect whether the candlestick is bullish or bearish in that direction. Your aim is to identify the peak of that
Okay,
high
sir.
or the value point of the low. So now I always have one simple rule that every high must have a low. Every high must have a low. Every high must have a low. In other words, every peak must have a valley. So if it's the highest point, then this must be the lowest point. And the lowest point most likely is where I'll draw to take out the what? The highest point. So this is the origin. Now mark this very well because it's going to be a continuous class. So let's just see how it turns out. Yeah. Okay. And then this. So this high gave rise to this low gave rise to this high. So I'm going to mark this. Get it? Okay.
Yes, sir.
So this is the higher low. Then this is a higher high. Now, this high is higher than this, so I'll acknowledge it. Okay, so I'll still keep it as higher high. And then this is the low that gave rise to that. So I'll acknowledge it. So you understand the labeling, right?
Yes, sir.
Okay, so that's how you go about labeling your charts. So, and then we have another high here. Remember, this is a weekly time frame. Another
Yes,
high,
yes, yes, sir.
and then another what? Higher high here. Okay. And then what do we have here? Another higher high. And then what? Another is a higher low.
Yeah.
Okay, so that's how you label these things sequentially. Okay. And then this low here was actually the one that took out this high. This low here was one that took out this high. So that's why I'm putting the higher low here. All right. So if you look at it again, now, this is how you label an uptrend. Now, this is a weekly time frame labeling. What about this side? Okay, so it was from this higher high. So you want to label this higher high.
No one has taken it
Here,
yet.
what happened here? What actually happened here? What actually happened here? I think I
So,
can
but totally falling.
do a little replay that news. So let me do a little replay. Let me take out this. Okay. So if I come to this site, so if you look at this apparently, this is a perfect way of you teaching yourself how to identify your swing highs and swing lows. This is on the weekly time frame. Do you understand?
Yes, sir.
Is on the weekly time frame. So now your essence, your main, what you're actually looking for is your ability to identify the peak of a high or the value point of a low. If you can do that, it will be easy for you to migrate through on an uptrend and in a downtrend. The same way, in a downtrend, what you are looking for is what? The peak of a high
Lower.
and the value point of a low. The difference is that that one is lower high, lower low. But then for the market to switch from a uptrend to downtrend, it takes a whole lot. It takes a whole lot. It takes a whole lot of sell orders, a whole lot of um, closing up of buy positions, a whole lot of market shift. That's what they call it, a market shift in market structure. Yeah, it takes a whole lot of market shift. But then this is what I want you to do. I want you to practice how to label an uptrend. First, identify swing points like I did. Then after you've identified the swing points, the second thing is for you to do what? Is for you to label them appropriately. After you've labeled them appropriately, then you consider, can now consider um, talking about how to take trades. Then, all right. So this is how you go about it. So indirectly, let's look at
Sir,
yes.
okay. I'm looking at the one you just stick out now. The banana was what I give birth to both higher high.
Mm-hmm. What did you say?
The one you just put there now.
Mm-hmm.
I just forgot that what was the one I give birth to this higher high.
What gave birth to what?
The higher high.
How do you mean?
The last higher high.
I don't understand.
The last higher low that you just stick out just now.
This one,
Yes.
okay. This one,
Yes.
mm-hmm. Is the one that gave birth to this high.
This one. Yes. That's what I just observed now.
Mm. Okay. So what about it?
Okay, sir.
All right. So let's look at how you can also do downtrending structures. Let's play with this guy here a little bit. Okay? And then we can talk about market structure shift and change of character. Okay, that would be another class. So let's talk about a downtrend. Downtrend is actually a period. Um, the same way uptrend has to do with a period where there is high demand for a particular currency. Downtrend is a period where there is high supply for a particular currency. So diagrammatically, this is how it looks like. Diagrammatically, it's kind of different in real life scenario, but diagrammatically, this is how it looks like. So you identify your swing point, like I told you, the highest, the peak point in a high, and the value point in a low. That's your criteria for identification. Okay. So once you do that, what do you now do? You label it. Okay. So let's look at this little pullback. Can we now leverage on it? Yes, I can. I can perfectly. So let's look at it. So based on that diagram that we just talked about, if you see this, bap, 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 we can make do with this little drop. Okay. So you can look at this. So permit me to take this out. So I can call this high, and then I can call this what? Low. Now, all right. And then I lock it. The reason why I lock it is so that even if I cannot move it about just like that, all right. So the next thing is to, what's the peak points there? This high here actually still plays around with this low, but this high here took out this low, so I can acknowledge as my lower high, all right. And then where did it give rise to? Here, and I can acknowledge this as my what? Yeah, the lower low. So you can see that, right? And then this is more like a range, but what are you looking at? The peak point. So this is the highest point that the market rose from. I can play with this as my lower high. And then lock it up. Did I lock this? And then from here, the market dropped down to here. So I can look at this as my what? Lower low. All right. So and from there, this came as my lower high. And then this dropped down here to my lower low. Okay. So from here, the market dropped down to this, and this pushed back to this. So you can choose. No, this is my what lower high, and this is my lower low. So you can see this is how you play around with your leveling. So once you have these structural formations, it makes it easy for you to know that even when you have a pullback like this, the market will always have its way to respect the structure. You understand?
Yes, sir.
So a quick one, let me add this, a quick one before I end this class for today. So now you are going to have your assignment. Your assignment is for you to identify your swing point, uptrend, and a downtrend. So go look for 3 different markets that the market is giving you uptrend formation and downtrend formation. Look out for these structures. You understand? Don't use lower time frames. Use higher time frames, either your daily or your weekly or your 4 hours. So look out for these prior structural formations, mark it out, label them, send me screenshots. That's how you're going to practice. Do you understand? But
Yes, sir.
then let me give you some of the rules that I play with when it comes to studying market structures. Number one, every high must do what? Have a low. That's number one. Number two, in higher high formations, in uptrend, the new higher high must exceed the previous higher high, and the new higher low must be higher than the previous higher low. Number three, new higher high must be higher than previous higher low. So if you check out this, every high must have a low. This high has a low. This low has a high. This high has a low. That's the first. Number one. Number two, this higher high is higher than this one. This higher low is higher than this one. So you can see the sequence the market plays around.
Yes, sir.
You understand? Even so, in a downtrend, the new low must be lower than the previous, and the new high must be lower than the previous. So let me add it here. Likewise, in a downtrend, the new high, that is lower high, must be lower than the previous lower high, and the new low must be lower than the previous lower low. You understand now?
Yes, sir.
These are some of the rules. Now, number 3, if peradventure, if, let's say for example, in an uptrend, when a new low
Yes, sir.
goes lower than the previous low, it could signal two things. A, change of character, or what they call market structure shift, which means that the market has changed direction. Okay, change direction. Number 2, it could be as a result of a fair value gap. And when this happens, that means if you're looking at fair value gap, there's a whole lot of concept. That means we're looking at things like inducement and inducement from our other blocks, etc., 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 etc. Okay.
Sir, can news change this thing?
News does what?
Can news change the direction of the market?
Can they change the direction of the market?
Yes.
Yes and no. Yes and no. We will come to that when we want to talk about the impact of fundamentals. Yes, let me even answer it here. News can change the direction. Usually, for example, if you have an option and then you have a fair value gap down, the news most likely will liquidate the market and then maybe touch the zone and then go back to the original trend. Or there are times it could signal a positive complete change of direction, but then there'll definitely be a pullback to balance the market and then before continuing on the new direction. Do you understand now?
Yes, sir.
All right, so this is just it about this. So, but first, your assignment today is to focus on this. Identify the trend, label it appropriately, send me the screenshots. So once you do that, we can now talk about rule 1 and rule 2, and then maybe from the next class, we can look at rule 3. If an uptrend, that is when a new low gets lower than the previous low, then we can say this is it. So that is where this concept here, this particular point will come in, and then we can talk about it in our next class. So let me stop there. I wish you the very best. We will see much later. Any questions?
No, sir.
Are you sure?
Yes, sir.
Okay. Go and practice, and then we will see. Take care.
Thank you, sir. God bless you, sir.
Bye.